Hello and a warm welcome back to the Energy Connect studio at ADIPEC 2025. My next guest here is Simon Flowers, Chairman and Chief Analyst at Wood Mackenzie. Simon, welcome back to the Energy Connect studio.
Well, it's my pleasure to be back with you, Chiranjib.
Thank you very much. As we wrap up ADIPEC 2025, what are your key takeaways and findings from this year's ADIPEC?
Well, I've condensed them into two takeaways. I mean, there are many more I could include, but AI, we can't go much past that. And I can't remember who it was that coined the phrase, but we moved from knowledge is power to power is knowledge, which is an allusion to AI, of course, and it's been massively talked about. And my reflection is that it was a thing last year. It's a massive thing now, and I imagine when we come back next year, it'll be an even bigger thing. And it's trying to find that interconnect between AI and energy. The two have a strong Venn diagram, but there's more of that to come. The second thing is that oil and gas is back. A little bit subdued over the last few years as different companies around the world tried different pathways, but the front foot is forward again, or the foot is forward again, to look at building portfolios for next decade. So upstream oil and gas, trying to acquire reserves, build reserves, is a big thing too.
So Simon, one of the things that Wood Mackenzie does is to track the progress of the energy transition. Yeah. And you have an integrated view on that. So tell us more about that. How is it evolving?
Yeah, our latest outlook is our 7th. We've been following this since immediately after the Paris Agreement, and we put it out last week. And there are some key findings. The first, I'd say, is that much of the progress towards net zero or 2 degrees or lower is going quite well. So renewables growth is going to be absolutely tremendous. China is putting in more than anyone else in the world, but even the US, where subsidies have been less, there's still very strong investment going in there. But when we look at it overall, various barriers have come up in the way, whether it's geopolitics, the cost of the transition, and most importantly, the veering of governments away from sustainability to energy security and affordable energy security. So the conclusion of the report is that instead of a 2.5 degree pathway we were on last year, it's drifted up, I'm afraid, to 2.6 degrees. So we're going in the wrong direction, or it's happening more slowly. And that means that we're going to be reliant on oil and gas and even coal for a little bit longer, unfortunately. It's still 80% of the energy mix. And maybe the final point, without going too deeply into everything, is that we are moving into a phase where we're going to see continued energy demand growth. We will need fossil fuels for some time, but we're also going to need, to meet that energy demand growth, we're going to need low carbon energies as well. They'll fill that incremental bit, adds to the energy mix, if you like. So there'll be renewables, there'll be carbon capture and storage, and in due course hydrogen, and some of the ones that are challenging on a cost basis, things like new nuclear and geothermal. In time they will come in. So a real mix of supply sources.
Talking about how the demand is evolving,
yeah.
Now as here at ADIPEC we see AI is front and center of the conversation. There's a surge of demand for EVs, for example. How do you see that altering the forecast into the future for the long term?
Well, things like EVs are really mixed. The views are really mixed anyway, because when trying to displace internal combustion engines on the light vehicle side, it's largely about cost and it's about infrastructure. And China have obviously got that more right than others. They've got lots of automotive builders. There's a lot of competition in the market, and they're able to produce relatively cheap ones. They put the infrastructure in. So over 50% of sales, of course, or light vehicle sales in China are EVs already, but it's way lower than anywhere else. In Europe, it's halted about 20%. In the US, it's still in single digits. But you're right to point this out. There's 2 signals we're looking for the transition to speed up a little bit. One is when EVs really start to penetrate the markets other than China, so US in particular, but also Europe. And the second big one, which will get us on the way, is when we start to see a more collaborative geopolitical environment to tackle climate change, and that really means collaboration between blocks and countries. So Chinese, the US are going to be really important. US coming back into the Paris Agreement would be a great signal. Might be a few years away yet though.
Now the boom in data centers, and the how energy for AI and AI for energy. So how do you see that altering the dynamics for the power market?
Well, it'll vary from country to country, but let's focus on the most visible one, the US, because the US administrations, people who've been here, Secretary Bergen, for example, made it very clear that the US wants to be the leader in this, and of course they're up against China. But it's very visible what's happening in the US. They're building out at a very fast rate data centers to the extent where the number of gigawatts they're going to require in the next 5 years is equivalent to about 20% of peak demand. I'm sorry to give you so much figures, but that 20% of peak demand compares with snail pace growth in power demand in the US this century. So it's really going to shake up the industry. It's a big challenge for power companies to keep supply up at the rate of demand growth. That probably is going to put upward pressure on power prices, which is going to cause real problems for regulators, how they manage the tariffs. So it's a through the value chain challenge, but it's an exciting one all the same.
Simon, one of the interesting developments that we see recently is the globalization, let's say, of NOCs and their bigger influence on the global gas and LNG markets. So how do you see that, and do you see a lot of consolidation happening, for example, in terms of merger and acquisition activities?
Yeah, so you ask about IOCs, but actually it's all of the big companies. You ask about NOCs. The IOCs too are looking to build portfolios into the next decade for the very reason that it looks like oil and gas demand are going to be pretty resilient. You ask a particular aspect about what are the NOCs doing. So many of the biggest national oil companies have been focused on maximizing production and revenue from their own country. But we have, as you suggest, been seeing different steps. So oil producers like Saudi Aramco or ADNOC, for example, have been getting into the gas business. And ADNOC also the oil business internationally, but gas is a super interesting thing. I think, and Qatar, by contrast, a gas producer is looking for high impact exploration, and has made some great discoveries in terms of reserve. So there's a thing going on here, and I think it's partly about diversification. It's partly to make their own portfolio more resilient. I'm sure it's also about making money as well. But I think it's the beginning of a trend to make a real impact on some of these NOCs. For domestic production will require quite a lot of investment. It remains to be seen just how much they want, but I think it's the beginning of a trend, and we will see all aspects, not necessarily every company, but national oil companies looking to acquire assets, to access discovered resources in other countries, and some of them will even do high impact deep water exploration, the riskier side of the business, but they may follow Qatar Energy's example there.
Simon, it's been such a pleasure. It's always a pleasure to talk to you, and thank you for coming back to the Energy Connect studio.
Well, I've really enjoyed the interview. Thanks so much.
Thank you. That was Simon Flowers, Chairman and Chief Analyst at Wood Mackenzie. Thanks for watching, and you can get more video interviews like this at energyconnects.com. Don't forget to follow us on social media, and I'll see you soon on another Energy Connects discussion.